Hello everyone, welcome back to my channel Medhasvi Commerce Classes. So in the previous video we have started with the dissolution problems. So in this video also we will continue solving with the dissolution problems. In the previous video I have solved you the problem which is given in April 2023, March 2023 problem. So today I have taken May 2023 question paper problem. Okay. Before going to today's problem, if you people have not subscribed to my channel, please do subscribe to my channel Medhasvi Commerce Classes. Like and also share with your friends also. So without much delay, today we'll move on to our next problem, that is in the dissolution May 2023 question paper problem. So the question was like this: Mayur and Kumar are partners. Who are the partners here? There are two partners. One is Mayur and another one is Kumar. Are the partners sharing profits and losses equally? See, you people can see it over here. They have given equally. They have not given the ratio. Keep it in your mind. Equally in the sense you should always remember it as 1:1. Ma'am, what if three partners were there? Then go like this: 1:1:1. Four partners are there: 1:1:1:1, like that. Okay. So equally in the sense you have to share the profits and losses in the ratio of 1:1:1. So here we have equally only two partners, so we are taking 1:1. They agreed to dissolve their firm on 31st/3/2022. On the date their balance sheet was as follows. So now they have given the balance sheet, few assets is mentioned and also few liabilities were mentioned, and they have also given some information regarding how much asset they have sold. So what is the price of the stock, bills receivable, furniture, debtors and all. And also apart from that they have given you the information Mayur took over buildings. Who is taking over the buildings? Mayur is taking over the buildings. For how much price he is taking? For 60,000. And this fellow Kumar is also taking something. You can see Kumar took over motor car at rupees 26,600. Okay. So few assets we have sold, and in that two asset, building was taken over by Mayur and motor car was taken over by Kumar, and all the liabilities were paid in full. So apart from that, all the liabilities you are paid in full, and we have incurred a dissolution expenses of rupees 5,000. This is our information. So now we'll move on to solving the problem. Very simple and very easy. In the previous video I have given you some steps which you have to follow while preparing the realization account. Hope you people remember those steps, and I have also written it here. We'll just go through with that steps one by one and we'll solve the problem. What is the step number 1? Record all the assets. Record all the assets to the debit side of your realization account except cash in hand, cash at bank, P&L account, PBD or RBD. So we'll do that one. Which side we have to record it? Debit side. All the assets we have to record except cash in hand and cash at bank. See here the assets, you can see it over here. Cash at bank is there, don't record it. Except cash in hand, cash at bank, P&L account is not there, and RBD or PBD also not there. So apart from that, remaining what and all assets you have it here, all the assets should be recorded in the debit side of your realization account one by one. So we'll move on to recording in the debit side of your realization account. Okay, we'll go one by one here. 2. Debit side will start with 2. First one, what you have? Bills receivable. To bills receivable. How much is the amount they have given? They have given 20,000. Okay, come to the next one. What you have? I hope you people are observing. Next one is to stock. To stock. Stock is how much? 30,000. Come to the next one. Next one, to debtors. To debtors. Debtors is how much? 40,000. Next, to building. To building. Building is how much? Building is how much? 50,000. Come to the next one, to motor car. To motor car. Motor car is how much? 20,000. Come to the next one, to furniture. Furniture is how much? 40,000. Okay, now we have completed with the all the assets. So these assets, as you all know, that you have to record it in the outer column of your realization account. Record it in the outer column of your realization account. Now we have completed with the step number 1. Come to the step number 2. What is the step number 2? I hope you people can see it over here. Step number 2 is record all the external liabilities. See here, record all the external liabilities to the which side? Credit side of your realization account, except general reserve, reserve fund, P&L account, partner's loan and capital. Keep it in your mind. Partner's loan should not be taken. Apart from the partner, if any person is there, their loan should be recorded. Now we will see what and all the liabilities we have. So we should not record reserve fund. Reserve fund should not be recorded. Capitals should not be recorded. Then what and all you have? One is creditors and another one is bills payable. So now we will move on to recording one by one item. Okay. So now come here, we will just go through with this one by one item, we will record it. Okay, this side it will start with by. First one you have creditors. Creditors how much? Take it to the outer column, creditors 50,000. Come to the next. Next what you have? Bills payable. Bills payable is how much? By bills payable. Bills payable is how much? 30,000. Only 2 items to be recorded. Hope you people understood this. Now come to the step number 3. Okay, what is the step number 3? Sell all the assets. After recording, now what you should do? Sell all the assets. All the assets should be sold at the what price you have to sell all the assets? You have to sell it in the credit side of your realization account. So now we will come to the credit side of your realization account. We will sell one by one assets over here. Okay, ma'am, at what price we have sold? See, they have given you the information. Now come to the credit side of the realization account. Okay. So here I told you, when we are going to sell any of the assets we are going to sell, the amount will be credited to your bank account. If they have given cash at bank here, you should write it as bank. If they have given cash in hand, you should write it as cash. Both the things are given, write it as bank only. So now here we have bank. I think you people can see it over here on the screen. So in the credit side, it is opposite. See, debit side will record the asset, credit side we are selling the assets. Okay, so now we will move on to by bank account. By bank account, we will record one by one. Below that in the bracket, we will just mention it as assets realized. What do you mean by realized? Realized is nothing but assets sold. Now we will record one by one. See here they have given for how much price you have sold the asset. I think you people can see it here. Stock is sold for 30,400. Stock. Take it to the inner column, 30,400. Come to this side, bills receivable. Bills receivable. For how much price you have sold bills receivable? Bills receivable is sold for rupees 19,000. Next, furniture. Furniture is sold for rupees. For how much price you have sold furniture? 33,000. Next, debtors. Debtors you have sold for rupees how much? You have sold for 42,600. Okay. Now, so next you can see it over here. There is one thing which is called as an unrecorded asset realized. You can see it here. You have unrecorded asset realized. What do you mean by this word called unrecorded? Unrecorded in the sense which is not recorded in your books of accounts. They have missed to record that, but you have got that asset. So you have sold that asset. Now you are getting the money from that. That should also be written. That amount should also be credited in your bank account, right? So we'll just go here only and we'll just mention it as unrecorded asset. Keep it in your mind. This is very important adjustment. Whenever they have given you unrecorded asset, make sure that along with the other assets you have to sell that asset also. So unrecorded asset you have sold for rupees 2000. Now we'll check all the asset whether we have sold everything or not. So here we have sold stock. Yes, stock is sold. For bills receivable, yes, bills receivable is also sold. Next, debtors, yes, debtors is also sold. Buildings, okay, buildings is not there. Motor car is also not there. Furniture, yes, furniture is sold. Only two items remaining is building and motor car. While reading the problem, I have told you building and motor car, the partners were taking care. Mayur took over the building, Kumar took over the motor car. They are taking over, so we'll record it here below. Below we'll record it separately, but before that we'll add all these items and we'll write it in the outer column. So when you add this, you are going to get 1,27,000. 1,27,000. Now below that we'll write one by one. By who is that first person? Mayur, capital account. Mayur, what he took over? Mayur took over building. Building taken over. For how much price he took over building? They have given in the problem, you see, he took over building for rupees 60,000. Come to the next one. Who is the next partner? By Kumar, capital account. What he took over? Motor car took over. For how much price he took over motor car? You should see the problem, that is for 26,600. Okay, both the persons have taken over this asset. Completion, asset sold is completed. Now come to the fourth step. You can see it here, step number 4, pay all the liabilities in the debit side. So now come here, we have sold the assets this side. Now whatever the liabilities we have, we'll pay it to this side. We'll just write it as to bank account. When we are paying, amount will be debited from our bank account, no, so you have to write it as bank account only. By bank account, in the bracket, liabilities paid. Okay, now we'll just record one by one liability. We have only creditors and bills payable, and here they have mentioned all the liabilities should be paid in full. So exactly the same amount, we'll just pay it over here. Okay, so first one we have creditors, take it to the inner column and then we'll take it to the outer column. 50,000. Next we have bills payable. How much? 30,000. Now we'll take both the things to the outer column. 50 plus 30 is 80,000. So step number 4 is also completed. Now come to the last step. Pay the realization or dissolution expenses in the debit side. Okay, when we are paying, again the bank account will be debited. So we'll just write it as to bank account. Below dissolution expenses. Okay, so how much is the dissolution expenses? Directly take it to the outer column. You can see it over here. Dissolution expenses is 5,000. Hope we have completed all the 5 steps in your realization account. So now we'll just total it. Both the side we'll just check the total and then we'll see which side it is more. This side you have a total of debit side 2,85,000. Credit side you have a total of 2,93,600. Debit side it is 2,85,000. Debit side it is 2,85,000. Credit side it is 2,93,600. So now you can see which side it is more. The more is 2,93,600. Are you getting my point? So write this 2,93,600 on both the sides. So now on both the sides we will mention it. 2,93,600. 2,93,600. Okay, now from this 2,93,600 you minus this 2,85,000. You minus this 2,85,000. So when you minus this 2,85,000, you are going to get the balance of 8,600. Do you remember in the previous video I have told you, if your debit side is more, then it is. If your debit side is more, then it is loss. If your credit side is more, then it is profit. So now which side it is more? Credit side is more, then it is profit. So this profit will be distributed among the partners in their profit sharing ratio. 2. Profit transferred to. Profit transferred to. Who is the first one? First one is Mayur. So equally they are sharing, right? So first one is Mayur. Mayur equals, how much it is? 8,600 into 1 by 2. 8,600 into 1 by 2, which comes to 4,300. 4,300. Next, Kumar. Kumar equals 8,600 into 1 by 2, which comes to 4,300. Got my point, everyone? See, so simple your realization account. See, you just to follow the steps whatever I have given. These steps is more than enough for you people to understand the concept. Read these steps and accordingly you just calculate the realization account. Now, after realization account, next is partners capital account. Partners capital account, first in the credit side, write the capitals of the partners. So, by balance brought down. Capitals where they will give you? They will give the capitals in the balance sheet. See here, Mayur 75,000, Kumar 60,000. We'll just go through with that. Mayur, how much? Mayur, how much? Mayur is 75,000, Kumar is 60,000. Okay, Mayur is 75,000, Kumar is 60,000. After recording the capital, here you have got profit. No, profit should be recorded. See, it is opposite. Profit where you have recorded in the debit side. So, it will come to the credit side. By realization account, by realization account, in the bracket we will just mention it as profit. So, for your clarification, okay, profit. How much profit you have? 4,300, 4,300. Now, come here. If you have any reserve fund or general reserve given in the problem, see, you can see it over here. You have reserve fund that should be distributed among the partners in their profit sharing ratio, okay. So, we will just write it here in the credit side by reserve fund. By reserve fund. You have how much of reserve fund? 10,000, right? 10,000 should be distributed in which ratio? In 1:1 ratio. So, 10,000 when you distribute it in 1:1, it will come to 5,000 and 5,000. And now, you check any P&L account is given. Any P&L account in any side it is given. No, it is not given. So, we will move on to next one. P&L account is not there. Now, you check whether any of the partner took over any of the asset. See, Mayur taken over building, Kumar taken over motor car. Two partners have taken over two asset. This is which side you have recorded? Credit side. So, it will come to debit side, okay. Record it here to realization account. To realization account. We'll just write it as assets taken over. See, I am not mentioning the name of the asset because two partners have taken two different assets. So, we'll just mention it as asset taken over. Okay. So, Mayur, how much is took? 60,000. Recorded 60,000 here. And this fellow, Kumar, 26,600. Okay. So, I think we have completed with all the things. Now, we'll just total it. Very simple. First, capital, profit or loss, reserve fund or general reserve or P&L account, then asset taken over or liability taken over. We'll just total it and put it here. Here this one comes to 84,300. Here it is of 69,300. 69,300. We'll just write these things on both the sides. Okay, now from this, from 84,300, you minus this 60,000, which comes to 24,300. Here it is, from this 69,300, you minus this 26,600, which comes to 42,700. This should be written as to bank account. You have to pay, in the bracket we'll write it as B bar F. B bar F stands for balancing figure. You have to pay, see, you have to pay 24,300 to Mayur, 42,700 to Kumar. That's all partners capital account. Now we'll come to the bank account. Bank account, first record the balance. Balance should be recorded in the debit side of your bank account. Okay. To balance brought down. So now, ma'am, where they used to give this balance? See, they will give this balance here. Cash at bank you have in the balance sheet. How much it is? 25,000. Take the 25,000 here. 25,000. Very simple bank account. Now, after writing the balance, no need to worry. Come here, realization, you check where and all you have bank. First, we'll just highlight it. See, here you have bank. Okay, we'll just highlight this. Here we have bank, and one more, here we have bank. This side, here we have bank. Okay, only 3. So, we'll record all this, realization, and partners capital, here we have bank. Where and all you have bank, all those things will go to bank account. Just opposite. If it is there in the debit side, it will go to credit side. If it is there in the credit side, it will go to debit side. Okay. See, here you have 2 bank account. Which side? Debit side. How much is the amount? 80,000 is the amount. So, we'll just take it to the credit side of your realization account. Now, we'll come here by realization account. How much is the amount? This is liabilities paid. Liabilities paid. How much is the amount? 80,000. Do you remember? Yes. Now next. Again here you have bank. Dissolution expenses. Debit side you have. Write it to the credit side. You have 5,000. Again by realization account. Okay, we got it. Dissolution expenses paid. Okay, we'll write it as dissolution expenses 5,000. Okay, next you can see it over here. Here we have bank, but which side? Credit side. So it will come to debit side. To realization account. To realization account. The bracket assets realized. So, the amount is, do you remember the amount? Okay, the amount is 1,27,000. 1,27,000. 1,27,000. Oh, sorry. 1,27,000. Now, completed with the realization account. Keep it in your mind. After completing with the realization account, you should check whether any partner has given any loan. Keep it in your mind. If loan is there, first you should write the loan, then only you should go to the partner's capital account. This problem, you don't have any partner's loan. So, directly we will go to the partner's capital account. Here you have 2 bank account. Here we have 2 amounts over here. 24,300 and 42,700. This is there in the debit side. We'll go to the credit side. One by one we'll record it. By Mayur's capital account. By Mayur capital account. How much is the amount Mayur capital account? 24,300. 24,300. Next, by Kumar's capital account. Kumar's capital account is 42,700. Okay, we'll just total it whether it is getting tally or not. We'll see. Here you have 1,52,000. Okay, here we'll just check. Here we have 1,52,000. Yes, it has been tallied. 1,52,000. 1,52,000. Okay, hope you people have understood this problem. We have a trick over here. When you do a realization account itself, you can see whether you are for how much amount your bank account is going to get tally. Okay, ma'am, how to check it? Always keep it in your mind. See your assets realized, how much amount is there? 1,27,000. This one plus whatever the in the cash account, in the balance sheet, whatever the cash at bank they have given, this one, if you add these two, that answer should be your bank account answer. See, you can check it over here. 1,27,000 plus 25,000, which comes to 1,52,000. That will be your bank account balance. So while doing realization account only, you can come to know what will be the answer of your bank account. That will be easy for you people to cross check your answers. Hope you people understood this problem. Very simple, very easy. Try to solve this problem. Okay, so next in the next video I'll come up with the PBD and RBD adjustment and a little bit difficult adjustments in your dissolution. Until that, stay tuned to my channel. Bye bye.